Coming up in the next 30 seconds, joining me live now is CommSec Senior Economist, Mr. Ryan Felsman. Ryan, what are we expecting today? Not long to go. It'll drop any second. Take it away.
Well, Tom, the Commonwealth Bank is expecting no change in interest rates. We think that the Reserve Bank will look through the latest accounts due tomorrow for the June quarter. We think that economic growth will probably slow to around 1.4%, which would be the slowest annual growth rate in a decade. The retail sales numbers today were quite concerning, though, down by 0.1%. And we have seen the annual growth rate of New South Wales retail sales up by just 0.4%, which is the weakest in 7.5 years. So really hope, of course, that the property recovery, particularly in Sydney, up by 1.6% in August, will broadly lead or at least be a tonic for household consumption going forward.
Now, so on hold, we're just hearing that through now, on hold at 1%. Look, not a big surprise here, Ryan, given the two previous cuts. There's more time this year. The biggest factor, I'm sure, would have been those big housing markets as well, Melbourne and Sydney, both of them showing real signs of life. So that's the other factor to all of this. You know, if they're showing signs of life, the rate cuts are having an impact, even if the rest of the economy hasn't picked up as yet. But, well, that might put more pressure on the federal government and stimulus.
Well, that's right. So if you look at what Governor Philip Lowe's been talking about recently, he's been saying there's really only so much that monetary policy can do. That said, though, our expectation is that we'll see interest rates of 0.5% by February next year. Certainly the stimulus, together with infrastructure spending, is likely to boost the economy in the second half of this year. Of course, we have seen about $7.5 billion worth of those tax offsets reach the account of about 10 million Australian low and middle income earners. So really going forward, a lot of focus on the jobs market in particular. We saw 41,000 jobs created in the July month, but the unemployment rate of 5.2% has ticked up from 8-year lows of 4.95%. We have seen unemployment rates across the country, particularly in Tasmania, South Australia and Queensland, lift above 6%.
The dilemma here for the Reserve Bank, and we'll wait to hear what they've had to say, but the reason why a lot of people, including yourself, are pricing in further cuts later on in the year is just that they don't see the recent, I suppose, impact of these rate cuts as transforming so many other parts of the economy. You mentioned there before jobs and the jobs market out there. This again now, the long-term impact on that, or forecasters should say, even though, Ryan, we've had really good jobs growth over the past few years, no one's predicting that to continue for the next few months.
Well, that's a very good point. If you look at the ANZ job ads data from yesterday, that was down by 2.8%. And we have seen job ads decelerate, down by 11% over the last 12 months. So we have seen a loss of momentum, particularly in the construction and retail sales sectors. And certainly we are expecting to see that unemployment rate tick up a little bit from here. But really a lot of focus going forward, certainly on what happens with regard to the two-speed economy. As was mentioned earlier, we're seeing home prices pick up in Sydney and Melbourne in particular, also in Brisbane, and that's where unemployment rates are below 5%. But if you look at the other parts of the country, places like Darwin and Perth, you can see that those home prices are still falling there. So really, we do have quite a differential when it comes to the Australian economy at the moment across cities and also metropolitan areas.
When are we going to first see the impacts of the tax cut? Because the government was getting out ahead of this yesterday and saying, well, you know, don't worry about this quarter, the September quarter's coming. Well, the RBA would be waiting a long time if it's going to wait till the September quarter data, which I guess would be early December. When will be the first sort of indicators we see whether or not people are spending this cash? Well,
we'd like to see August and September, really, those retail sales numbers pick up. But one of the things that we have noticed, of course, is that Australian consumers are very cautious at the moment. Of course, concerns around the economic outlook. We saw in the ANZ Roy Morgan Weekly Consumer Confidence Survey today, if you look at those economic outlook in terms of the consumer views, that was the lowest in 2 years. So really the consumer backdrop is less favourable around the economy at the moment, and that caution is leading to Australians to pay down debt. Mortgage debt remains elevated, and also housing affordability remains constrained in the two big cities. So really you combine that with tight lending standards, of course, and really that combination will pretty much lead to a cap in terms of home price growth as far as we're concerned.
Ryan Felsman, thank you for taking us through that. Ryan Felsman there from CommSec. So just repeating that news, on hold, no big surprise. These rates on hold at still this record low of 1%, albeit with an asterisk if you believe most predictions that there could be further cuts down the path. We'll go through just the health of the economy as well with our guest. Next hour, Ed Husick from the Labor Party.